So what does that mean overall? That means that it looks like this is going to roll over into Q2 because they're not taking the aggressive approach as they should to get things under control. Where the shock in the market, I believe, can come from is when the Welcome back, YouTube. So in today's video, we're going to go over the CPI numbers and also why I believe this is going to, well, at least the Fed's approach to this is going to pretty much kick the can down the road. So the numbers came out yesterday, and we are looking at roughly around 0.8% increase month over month, giving the Fed's numbers roughly around 7.8, 7.9%. But obviously, if you're out there spending money, buying gas and stuff like that, you know that these numbers are actually much higher than this, and we've been in double digits at least for like the last couple of months. But of course, the Feds have their own methods to determining what the inflation rate is. And next month is when things are really going to get interesting because they technically can't hide the gas hikes that we've seen. The really alarming thing is the fact that the Russia-Ukraine situation happened after these numbers have been gathered. So that's not even factored into these numbers here. So you can expect next month to, at least on the Fed side, for this to probably even touch, at least over 1%, or they'll probably try and keep it below 10%, even though we know it's above it. So we'll see how much of that gets factored in. But considering we rose roughly around $1 within the last 72 hours, when it comes down to the price of gas, we'll see how good of a job they can actually pretty much contain this report. If you follow my channel, you know that this is one of the indicators that we were looking for because we needed confirmation to compare this to what the Fed's interest rate hike they said they were going to do next week is. So they pretty much said they were going to do 0.25% and possibly do a rate hike at each meeting. We have roughly 7 more, including the one next week. And this is kind of going to give us an idea as far as for how they're going to handle our growing inflation that has literally been, this is our 4th straight month of in growing inflation, but they figure 0.25% is going to be a good starting point. In my opinion, that's nothing, and it's not going to work, and they're going to have to come back and be more aggressive. And this is what they're really trying to avoid is really shocking the market. Initially in January, I expected the Feds to come out and be really aggressive to get the inflation rate down, as they should. On around like March 16th, they've tap danced around it during their Fed meetings. They refused to answer specific questions. And then we had the Russia and Ukraine situation, which is obviously affecting our inflation rates. So now I believe they don't want to have 2 negative catalysts pulling on the market. So therefore, they're taking a lighter approach, at least initially, until we get some more of a concrete idea on the Russia and Ukraine situation. Because as we can see, we had another red day today, obviously, but as you can see, like we are threatening bear markets here in the NASDAQ. We peaked at around 21% a few days ago. And anything negative as far as we're saying, oh my God, or the Fed hinting that inflation is wildly out of control and they need to be aggressive, it's like, boom, recession. So they're really trying to tiptoe around this, in my opinion, and ultimately try and give this Russia-Ukraine situation a little bit more time to kind of work itself out so that we don't have all these negative catalysts pretty much preventing the market from going up or at least trending sideways. We know that short-term emotions control the market, and that looks like to be the case here because we see that inflation is up yet again yesterday, and now we're pretty much tiptoeing down again in the market. So the Dow again closed down red today. So what does that mean overall? That means that it looks like this is going to roll over into Q2 because they're not taking the aggressive approach as they should to get things under control. Where the shock in the market, I believe, can come from is when the Russia-Ukraine situation has not resolved itself and inflation is still going up month over month, and that 0.25% is literally doing nothing. Now, best case scenario is it gets monitored and you're able to pretty much say, okay, well, it actually retracted this month. It's not month over month. But as long as this is going on with Russia and Ukraine, and we see these gas prices the way they are, that's going to be really difficult, even to them with these numbers that I believe are honestly off. It's going to be really difficult to do that with gas prices trending the way they are, or even maintaining at the current price points. It's going to be really difficult for them to say, okay, well, 0.25%, yep, that's going to get our inflation back down to 2%. I highly doubt it. That's where the shock in the market comes, is when they come back and say, hey, that 0.25% is not doing enough. We're going to have to be more aggressive. Otherwise, inflation is going to get away from us. Or we have that rate hike and, or we have that inflation, the CPI report come out, and it's actually double digits, confirmed double digits with their report. That's going to send a shock through the market. And that's when we can start seeing those sell-offs and those red days even more aggressively than what we have now, even though technically we're threatening a bear market. Now, you can find this at the U.S. Bureau of Labor Statistics. You can pretty much click on this and kind of go, it'll give you like more in-depth. They do have energy as one of the highest spike increases. Here are those numbers here. So let's see, food is saying rose 1%. Don't know how they got that. The food at home index rose 8.6% over the last 12 months. Energy 3.5% in February. Let's see, medical care index 0.2%. So we know these numbers are actually much higher than this because we're actually out here in the economy and spending money every day, and we can compare it to what we spent last year and compare it to simply what, in most cases, we can compare it to what we spent just a few weeks ago. So, we're not crazy, but and neither is your numbers in your bank account or in your budget. So we know that these numbers are much higher than this. So this is what I titled this video, kicking the can down the road, because even though there's mass fear and uncertainty in the market, they're not taking care of the inflation as aggressively as they should. This has the potential to the shock in the market, especially as long as we have the inflation and this tightening of supply on oil. This is going to be really difficult for them to get it under control. And them delaying this and possibly letting inflation build up even higher just means they're going to have to come back on the other side even more aggressive. Best case scenario, this does have some kind of effect on it. The Russia-Ukraine situation, they reach some type of treaty. Everything goes back, not I can't say go back to normal, but a lot of the tension dies down, and this has some kind of effect, and then we can start trending back the other way. Otherwise, again, that shock in the market has just simply been delayed, not denied. What does that mean for us? That means great entries, great opportunities to buy into the market just by us being patient and continuously averaging in and literally waiting on those big dips. Because again, the market, as long as these negative candles come out there, as long as these situations has not been resolved, I know I've been saying this for months, but it's true. As long as there's not a resolution to the Russia-Ukraine situation, there's this tightening on oil supply. As long as there's not a solution or concrete evidence that inflation is getting under control, the market is not going to go into a sustainable rally. That is too much uncertainty. Markets do not go on bull runs in uncertainty. Emotions control the market in the short term. So this is something we're going to have to continuously keep an eye on and plan accordingly for the rest of the year. I hope you appreciate this update. Like the video, share the video, comment on the video. Check out the links in the description section. Get yourself some free stocks so that you can convert them into whatever stock you want. Outside the free ones, you can get like 5-10 free stocks with the current links. And also check out BlockFi. If you open an account with them, you can get up to $250 in some of your favorite crypto. And yes, that includes the top 2, Ethereum and Bitcoin. I appreciate all of you. Thank you. And until next time.